Hello and welcome once again to ChartMill. In this episode I will take a look at a specific screen that searches for stocks in a rising trend, but whose price has recently fallen slightly. This temporary dip can be used to take long positions in that specific stock. Trend traders will certainly recognize this strategy. A minor price dip is used to take new long positions or even to expand existing long positions. The most important condition when looking for such buy setups is that the long-term trend of the stock should still be positive. And using a stock screener such as ChartMill is the ideal tool to detect these kinds of stocks. The screening goes a lot faster than having to search for such setups manually. Moreover, the stock screener makes sure that only those stocks that fully meet your required criteria are retained. As with all other screens, it is best to start with general settings first. In this example, I will limit myself to the US Stock Exchange and use these basic settings. Price at least $5, with an average daily trading volume of 500,000 and a market cap at least small. Personally, I stick to these general filters, but if you want, you can set other criteria. For example, by only searching for stocks within a certain index, or by using the different SIC classifications to exclude certain sectors or industries. By using these first basic filters, we have reduced the total number of shares available quite a bit. As I mentioned earlier, it is important to limit ourselves to stocks that have a long-term upward trend, and in ChartMill several filters are therefore available. Either you choose the Indicators menu and select the tab ChartMill Trend. In the follow-up menu, you select Long-Term Trend Positive. If you want to set this filter a little less strict, you could also select the option Long-Term Trend Neutral or Positive. Another very popular and fast way to determine the long-term trend of a stock is to simply look at the price compared to the 200 daily simple moving average. A price below that average means a negative long-term view, while a price above the 200 daily moving average gives a positive long-term view. And you can easily set this in the Performance menu under the tab Price versus SMA. Since we are looking for buy setups in this example, we select Price above 200 SMA and the additional requirement that the 200 SMA itself must be rising. You can use the ChartMill Trend filter and the 200 SMA filter combined as I just did. But for this example, I am going to clear the ChartMill Trend filters and only use the 200 SMA filter to define the long-term trend. After we have filtered the stocks according to their long-term trend, it is time to screen for that specific dip in the rising trend. Identifying stocks that fall back slightly in a rising trend is easy to do by qualifying them based on their position relative to a specific moving average. In this video, I demonstrate this using the 20 and 50 simple daily moving average. First, I select the menu Performance and change the following settings. Under the tab 20 SMA, I select SMA 20 Rising and SMA 20 above SMA 50. Under the tab SMA 50, I select SMA 50 Rising. To define the price drop within the rising trend, I select via the tab Price versus SMA that the price should be below the SMA 20 but above the SMA 50. This reduces the number of shares available to only 11. If you think that number is a bit too low, you can try to set some filters a bit less strict. Try to change the basic settings first and only then the more specific settings if you really can't do it differently. After all, you want to define your desired strategy as well as possible. For example, we can reduce the volume requirements from 500 to an average of 100,000 traded shares. The number of candidates will then immediately rise from 11 to 18, as you can see on the screen. You could also try to change the market cap or the minimum price of the stock, for example. If you no longer have options in the basic settings, you may want to consider dropping the condition that the SMA 20 should be rising. But keep in mind that these are changes that do affect the quality of the delivered setups. In any case, the number of candidates strongly depends on market conditions. If the market undergoes a correction in the next days or weeks, you will of course have more candidates with the same filters. This is just the strength of a stock screener. The rules are completely objective, and a stock screener will not give you candidates if the filters indicate that there are none. That often differs from what traders see when they manually look for these types of setups. In less than ideal market conditions, people sometimes unconsciously start holding back buy setups that they would never hold back in other circumstances. In case you still have too many candidates after a first selection, there are a lot of additional filters that allow you to refine your selection even further. Did you know, for example, that our stock screener allows you to filter on specific candlestick patterns? If I select the inside candle, then only 5 of the 18 stocks still meet all the criteria. Or why shouldn't you consider some additional fundamental filters? Let's see which of these stocks have a price-earnings ratio of maximum 17. To do so, select the Fundamental menu and change the Price-Earnings tab accordingly. In this case, the number of candidates is further diminished to 9. Maybe you are interested in how strong the analyst ratings are for the stocks in this selection. If, for example, we only select the shares for which more than 90% of the analysts have announced a buy recommendation, we end up at only 4 stocks. And finally, there is one additional filter that you definitely should not overlook. That is the data that quarterly results are announced. This is so important because the publication of quarterly results usually has a very significant impact on the price movement of a stock. To visualize the results, I add the different moving averages that are discussed in this strategy to the chart as an overlay. I start by selecting the option Main Chart in the menu. Next, I add the 20, the 50 and also the 200 daily moving average. To clearly distinguish them from each other, I give them all a different color. Personally, I like to use 2 different time frames where I can view both the daily chart and the weekly chart of one stock next to each other. In this way, I have a clear view of both the long and medium-term trend. In ChartMill, you can easily do so by choosing 2 charts in the blue bar where the number of results are shown. By default, you will then see a daily and a weekly chart for each stock. Both charts will probably be underneath each other, but I want them next to each other. Select Chart per Line in the same blue bar on the far right and choose 2. Now you will see both charts next to each other. Which indicators you want on the second chart is completely up to you. Just select Secondary Chart in the menu and add as many indicators or overlays as you want. Personally, for the weekly chart, I only want to see the ChartMill trend overlay. This is an overlay based on a moving average that colors green, red or grey depending on the trend of the stock. If you want to read more about this ChartMill trend indicator, there is an article available in our documentation section, and I will add a link below in the description. To conclude this video, a few recent examples. This first chart is from Texas Instruments. Exactly the same filters that were used in this video were applied on October the 29th. As you can clearly notice on the chart, the price was below the rising 20 SMA, but above the 50 SMA at that time. Moreover, the long-term trend was bullish at the time the screen was requested, as the stock price was above the 200 SMA. The positive long-term trend is also clearly visible on the weekly chart. When I applied these filters on October 29th, I initially had 110 results. However, I still thought the number was too high. To refine the number of setups, I then set an additional filter. More specifically, the bullish engulfing pattern in the indicators menu was selected. ChartMill only gave me 4 choices, but as you can see, the results speak for themselves. Not only with Texas Instruments the price has risen afterwards, we saw the same movements in both Deere & Company, CSX and Copart. Anyone who has seen previous videos on this channel knows that I always emphasize the fact that ChartMill, or any other stock screener, is a great tool for selecting good buy or sell candidates. The screens are good starting points and allow you to spot low-risk setups that perfectly meet your desired criteria in a very efficient way. However, several of those setups will not deliver the desired result. Market conditions can sometimes change very quickly. So don't expect that by using a stock screener, the money will suddenly flow in. That will never happen. Trading on the stock market is a talent you have to cultivate. In addition to selection and timing, there are two other very important components you need to master as well: risk and position management. The importance of keeping loss positions as small as possible is vital to your trading career. So thanks for watching, keep safe, and if you like this video, please give it a thumbs up and subscribe to the channel.